Well, their Ethereum and Bitcoin are public tokens. And so their price isn't going to be purely anchored on fundamentals. They're
Yeah.
going to be reflecting investors' perceptions, because both Bitcoin and Ethereum are not mature platforms. Their best utility and growth and innovation are in the years ahead, right? So we're 10 years in, but there's more growth in the future. The percentage of market share of crypto of total assets is so small that we know that mathematically that's true. Whenever when you have something that has a hyper growth on ramp and you're discounting the future, it's going to be very volatile.
Howard Lutnick opens the discussion by marveling at Tom Lee's unflinching conviction. Ethereum, according to Lee, isn't just a digital asset, it's a frontier. While skeptics watch the charts, Lee sees a once-in-a-generation expansion of a technology that's still in its infancy. Lutnick, ever the realist, admits the numbers sound insane, yet he can't help but acknowledge that Lee's reasoning has precedent. When assets experience exponential adoption curves, volatility doesn't signal failure, it often precedes transformation. And for Lee, that transformation points toward a jaw-dropping price prediction that few on Wall Street are brave enough to repeat.
So does Ethereum's price going from 4,800 to 2,800, that is a staggering decline, but that probably is a minor change in 2030 fundamentals that is being priced and repriced by investors. And that's why there's hyper volatility.
Lutnick leans back in his chair, nodding slightly. What Lee is describing, he says, is not collapse. It's compression. The market's volatility, to Lee, represents growing pains rather than terminal illness. Ethereum's tumble from 4,800 to 2,800 isn't catastrophic. It's noise within a much larger trend. In other words, the market is struggling to price something that's still defining what it even is. Lutnick, known for his sharp market instincts, remarks that most analysts would never describe such a drop as minor, yet Lee does it casually. To him, the fundamentals of 2030 Ethereum dwarf today's concerns, making current prices almost irrelevant.
It's one reason why BitMine ended up engaging Tom DeMark as a strategic advisor, because he is the king of sort of price discovery. He is the father of systematic timing. And in our conversations, when he looks at Ethereum, he sees what looks like engineered or systematic liquidation taking place. So there is someone that is in crypto, we know it's market makers play a big role, but there's someone that is probably capital constrained and is therefore bleeding or having to sell reflexively as price falls.
Lutnick interjects, explaining that what Lee is pointing out isn't just technical, it's psychological. Systematic liquidation suggests that panic isn't random. It's orchestrated by necessity. Market makers, capital constraints, and algorithmic reflexes collide in a loop of self-inflicted pain. To Lutnick, this reinforces the idea that volatility can't be separated from human behavior. The crypto market, like traditional finance, runs on confidence, liquidity, and fear. But when those forces are codified into algorithms, the emotional cycles become visible on the charts in ways never seen before. Ethereum's struggle, he suggests, is both technological and behavioral, and Lee's recognition of that duality is what sets him apart.
That process is painful, but in his sort of rough timing range, his downside target, and we talked about this a few weeks ago, was 2,500 for ETH. So I think we're so close to that. It would be ideal actually for us to actually bleed to that level, because then that is creating what he calls a buy setup. A bottom in prices for him is when the last seller has sold, so that a stock or crypto no longer falls on bad news.
Lutnick laughs quietly as he repeats the phrase, when the last seller has sold. It's an idea that sounds poetic in the brutal world of markets. To Lee, the bottom isn't when people give up on crypto. It's when no one is left to give up. Lutnick explains that this is how capitulation creates opportunity. When Ethereum hits 2,500, Lee doesn't see despair. He sees entry. To traders trained on fear, that kind of thinking sounds insane. But Lutnick calls it classic contrarianism. The strongest recoveries, he reminds the audience, are born from exhaustion, not enthusiasm.
They could reverse at any time, because markets don't have to do what ends up being an ideal scenario.
Even as Lee warns of possible downside, he hedges it with a smile. Markets, he says, don't owe anyone logic. Lutnick underscores this humility, pointing out that Lee isn't pretending to predict timing perfectly. He's forecasting trajectory. The acknowledgement that markets don't have to do what's ideal reminds investors that even the best models bend to sentiment and surprise. In the world of Ethereum, where innovation outruns comprehension, reversals can happen overnight. Lutnick frames this as the fine line between vision and delusion. Lee's foresight has often appeared reckless before reality proved him right.
I'd say if someone wanted to say, why did crypto diverge from equities?
Yeah.
That's, I think, a big role, because they're in the past 6 weeks, nothing has actually fundamentally explained why crypto should be underperforming risk assets. Because the S&P, of course, has had a drawdown, but the S&P continued to rise for another 20 days. The S&P didn't peak till the 29th. So that divergence has to reflect either a change in how market function in crypto, or was there an existential new risk?
To Lutnick, this is the line that crystallizes everything. Lee is challenging a narrative that Wall Street largely accepts, that crypto's struggles reflect fundamental weakness. Instead, Lee argues the divergence is structural, not existential. Ethereum isn't failing. The mechanisms around it are adjusting. Lutnick emphasizes how Lee frames these events not as doom, but as distortion. The dislocation between equities and crypto isn't a collapse of belief. It's an inefficiency begging to be corrected. In Lutnick's eyes, this is the hallmark of every major turning point in market history, when perception lags behind truth.
The one thing that I would say that maybe isn't reflected in price is the number of account holders that got wiped out on October 10th.
Lutnick pauses as he reflects on this. October 10th, he notes, wasn't just another day, it was a cleansing event. When countless traders were forced out, the market reset itself. For Lee, that's not tragedy, it's purification. Ethereum's road to $9,000, Lutnick says, doesn't begin in the hype. It begins in the ashes of liquidation. That's the paradox of crypto's evolution. It grows stronger each time it breaks.
Crypto has declines, and we're not necessarily in a bear market, and it feels terrible. In fact, that's what you have to be mindful of, is that it's a hyper volatile space. So it feels terrible now, but just like in 2024, crypto felt terrible for many months, and then we've had these big moves.
Yeah, you have the meltdown, then you have the melt up. Volatility works in both directions.
Lutnick chuckles, saying this is vintage Tom Lee. Optimistic, almost defiantly so. To Lee, pain and payoff are two sides of the same trade. He doesn't deny the misery of market downturns, but he sees them as necessary precursors to exponential rebounds. Lutnick highlights this cyclical view as essential to understanding Lee's mentality. He doesn't see Ethereum's drawdowns as signals to run, he sees them as calibration. For those brave enough to endure the turbulence, Lee's logic promises a payoff that dwarfs the discomfort.
In the near term, there is downside, maybe to 2,500, but that's minor compared to the upside of trying to discount a super cycle. So we think ETH can be 7,000, 9,000 by the end of January, and that's a huge recovery move, but that's also pretty typical of what could happen in the fourth quarter.
Lutnick grins as he repeats the figure. 9,000 by January. To some, it sounds like fantasy, but he reminds the audience that Lee's previous predictions, from Bitcoin's rebounds to equity supercycles, have often played out against the odds. What Lee calls a supercycle, Lutnick describes as the digital asset market's adolescence maturing into industry-scale tokenization. He explains that Lee's thesis rests not on hype, but on history. Every transformative technology, from the internet to cloud computing, went through a similar phase of disbelief before mainstream acceptance. Ethereum, he argues, may be on that same trajectory now.
Volatility works in both directions.
As the conversation winds down, Lutnick summarizes the paradox that defines Lee's prediction. Ethereum's future, he says, depends on investors' ability to see through the chaos. What appears insane today may simply be the market's way of testing conviction. From engineered liquidations to systematic sell-offs, every tremor in the crypto landscape reveals both fragility and strength. For Lee, the story of Ethereum isn't about the price today. It's about the infrastructure being quietly built beneath it. If tokenization truly mirrors the electronification of past markets, as Lee suggests, then the volatility of today is the prelude to tomorrow's stability. Lutnick closes with a grin. If Tom Lee's right, he says, then what looks insane now might just be the most rational trade of the decade. Now it's time to hear from you. Do you think Ethereum will actually reach $9,000 by January? Or is this prediction a supercycle dream too good to be true?